I guess my question is kind of maybe putting this all into our macro framework, because it seems if we get rates right, you kind of get the prices right of housing, it seems like. So I guess my question is, so we established, right, that likely the Fed cuts, our view is 1 to 2 times, that's going to reaccelerate housing prices, I guess. But we have inflation accelerating afterwards, unexpectedly, right? So maybe by that March, February, we're at least talking about no hikes no, like a pause in cuts to hikes. And so I guess my question is, will that reacceleration in inflation, is that going to cause like a really big surprise to this market? Are they going to see like the actual crashes that they were supposed to see? I guess, how would you think about this?
Yeah, I think, well, I'd say a few things. One, I think the setup in the sort of short to intermediate term is that we're very likely to get a cut in September, especially if the labor market shows any further signs of cooling. You could have that second cut there. Then I think what you'll see is the bond market again begin. So in these next few months, the bond market's going to pull forward rate cut expectations, just like it did over the course of the back half of 23. But then, just as you transitioned into early 24 and the bond market took those rate cuts off the table, I think you'll see sort of a mini version of that as we get past that, post-September meeting, and we have those data points that are likely to be hotter. Where it then gets kind of interesting, so first of all, the base effects suggest that it's going to be difficult beyond that for inflation to come down in a meaningful way. But what'll be interesting is then you get into this whole sort of election and post-election dynamic, and we've already heard. I wrote an early look on Wednesday about this concept of fiscal dominance, right?
Yep.
And fiscal dominance is basically a phenomena where the central bank loses its independence at keeping rates, at an appropriate level to, keep inflation in check, because the fiscal spending side is so significant that the country simply can't afford rates to be high. And so that essentially strips the Fed of its independence, forces rates to be artificially low, and while it sort of, kicks the can for a little bit, ultimately the same fate ends up being met. The other thing that's interesting is you can sort of achieve, I guess, what would be an analog to fiscal dominance through other means, which is that to the extent that you have basically, the Fed's independence kind of stripped away from them, either explicitly or implicitly, that too can sort of bring on those same outcomes. And so what's sort of been interesting about Trump and what he's sort of been saying is, I don't know if you saw the interview he gave Bloomberg, but he had very interesting comments with respect to Powell. He basically said, I'd be happy to, or whatever, see Powell stay through the rest of his term, which would, go a year and a half or so into the next administration. But then he added the sort of caveat that was something to the effect of, as long as he's doing a good job. And so you can certainly read the tea leaves on that.
Which means him cutting, essentially.
Well, yeah, and so that's kind of where it's going to get interesting, right? And I think there's been comments also made to the effect of the exact opposite between now and the election, which I think is that Trump has basically said that Powell should not cut rates before the election because that would be political.
Yeah.
And
Well, he just wants it so that when he gets in, he can be the one that cuts the rates while everybody kind of struggles.
So we see how that works. But anyway, the point being that that'll be interesting, right? Because that's an additional overlay on top of whatever inflation's doing, whatever the labor market's doing. And of course, to the extent that we do end up with, significant, easing on tax policy, that of course is going to be very stimulative, and so there's an element there to consider as well.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.